Fall is in the air. In fact, I'm wearing a jacket in the studio because this is Florida and I don't have a heater in my studio. So I guess that begs the question, is Uptober still in play? This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, October 18th, 2023, and of course that means it is DCA Wednesday. As I mentioned, fall is in the air. Well, it actually got up to like 78 degrees today, but that was hours ago, and the temperature dropped off into the mid 60s, which, okay, maybe that's not that cold where you're from, but in Florida, that's straight up jacket weather, especially when you add the humidity and that salt air coming in off the ocean. It really does start feeling like an episode of The Deadliest Catch anytime it drops into the 50s. We're talking mittens and hat weather. As I alluded to in the intro, the big question is the month of October still in play? And of course, the answer is it's too soon to tell. Obviously, I don't have a crystal ball and anything could happen. But so far, it's looking pretty good with Bitcoin over $28,000. So it's up a couple percent since the beginning of October. And that's pretty impressive considering all the FUD that's been going on out there. Basically, everything that everybody's talking about in the media is of course, the Sam Bankman-Fried trial, the FTX scam, the fact that there's probably a recession still looming, although experts are disagreeing on that. Of course, I think we're already in a recession, and technically we would have been in a recession had they not just conveniently changed the definition, as you recall. And it's being reported, of course, that the bank runs, well, of course, the bank runs have not been ongoing. But just like in the 2008 financial crisis, we had that the initial weakness, the initial bank runs, and then there was a 6 or 7 month pause before things just completely collapsed. And so if we're looking at a repeat of that, the worst is yet to come. And there was a little bit of an allusion to that with Bank of America, for example, announcing that they're sitting on unrealized losses of $131 billion. Yes, billion with a B. Of course, all of the banks in the country, for the most part, would be insolvent if it weren't for the Fed's BTFP backstop program, where they're loaning these banks money on the full face value of their bonds, which of course are not worth their redemption value. They would be if you wait to the maturation of the bonds, but that's not how business is done. If you remember the way Bitcoin was treated until they changed the gap accounting rules, you had to mark your holdings down when they fell. You couldn't just mark them at face value. And in Bitcoin's case, when the price of Bitcoin recovered, you still had to show it as a loss, unless of course you eventually sold it. So they're playing fast and loose. It is absolutely quantitative easing, basically, printing money to give to the banks to prop them up so that they don't have to, so they're not insolvent, because $131.6 billion loss would definitely qualify Bank of America as technically insolvent. Of course, those are unrealized losses. This could work out for Bank of America. Who knows? Again, that's something we don't have a crystal ball on, but that gets to my point that I was saying, that pretty much everything in the news financially has been FUD, even if it's not Bitcoin FUD, it's economy FUD, or the warmongering between what's going on in Ukraine and now in the Middle East and Israel, etc. The doom mongers are convinced World War III is on the cusp, and if you are a believer in Bitcoin, you would say that should be good for Bitcoin, right? Because Bitcoin is a store of value; it should be the ultimate safe haven asset. But for the normies, it hasn't been playing out that way. Bitcoin still hasn't gone through its discovery phase of becoming that store of value, safe haven asset yet, as far as the average person is concerned. So I would have expected all of that FUD to bring the price of Bitcoin down. But maybe it's not like that meme of the polar bear holding the ball underwater, and that ball's just been held underwater for so long that it's just going to pop back up above the surface regardless of what FUD is out there. And of course, the closer we get to that halving, the more definite that is, because I'm a firm believer that the halving cycles are not over yet, and that TikTok next block, that halving's coming up. It's going to be, well, it's only 6 months from now, a little less than 6 months from now, depending on which estimate you're looking at. So obviously, once that happens, 6 months to a year later, we should be in that next face melting bull run, or at least the beginning of that new face melting bull run. But I digress. Before I get into the statistics, I want to point out that the mempools have been trending towards clearing. Last night, mempool.space was showing a recommended fee of 2 sats per VByte across the board, whether that was to get into the next block, a medium priority, a low priority, or even a no priority. Obviously, that was at night, and things are a little bit cheaper, which leads me into if you are looking at consolidating your UTXOs, or if you have a transaction to make on-chain that you're not in a hurry to make on-chain, consider setting a lower fee with the ability to replace that fee with replace by fee or child pays for parent, or a plan B to bump that fee if need be. But if you've got some time, it looks like cheap transactions are clearing in the night, and that's only been trending in the positive direction. So we've by no means seen the mempool clear, and we'll talk more about that when we go through the statistics. But they're trending clearer, and that's really cool. Especially because you don't want to see the mempool jammed up before the bull run even starts, right? But I digress. Before we carry on any further, let's talk about those vital statistics. As I mentioned, today is Wednesday, October 18th, 2023, and that means it is DCA Wednesday. And a little bit later, we're going to do our 117th Bitcoin stack. We are currently, at the time of this recording, at a block height of 812,833. And that puts us 27,167 blocks away from that halving, which looks like it's going to occur on April 20th of 2024, around the second half of April. Well, depending on which fee estimator you're looking at, blocks have just been screaming in, even with the difficulty adjustment we just had. And I'm getting ahead of myself, but when blocks are coming in faster, then that halving date's going to start creeping up on us and get a little bit closer. But who knows what's going to happen with the hash rate. Like Bitcoin's price, if you zoom out overall, it has been trending up and to the right. If that continues, we're probably looking at no later than April 20th that we see that halving, maybe even the beginning of April. But stay tuned, because it's coming up whether you like it or not. Back along the statistics, Bitcoin is currently valued at a US dollar price of $28,335, or 3,529 sats per dollar. And that's kind of a bummer. It is nice to see the price go up. For those of you comparing your stack of Satoshis to a stack of fiat, it's nice to see the number go up. But for those of us looking at the number of sats in the stack, we're going to get more than 200 fewer sats per dollar than we did last week. It's still a lot better than the 1,000 sats per dollar we'd be getting if Bitcoin hit 100,000, or less than that if it goes above $100,000 per Bitcoin one day. But still nowhere near as nice as when we were getting 72,000 sats for our $20 stack most of the summer. But I digress. As I mentioned, we're 27,167 blocks away from that halving. That's 27,167 blocks until El Salvador's first halving, because remember, they went on a Bitcoin standard 2 years ago that was in the middle of the last cycle of this cycle. So they bought in. They kind of like when we started this podcast, basically. We started this podcast just a little before President Bukele made his Bitcoin is legal tender announcement, and we bought in between the two peaks. If you remember, the cycle had a top in the spring of 2021, and then over the summer it went down into the 30s, and then it popped back up in the fall to as high as 69,000, depending on whose stats you're looking at. I'm going to round that up to 69,000. I've seen some people say it was lower, some people say it was higher, but 69,000-ish is good enough for the purposes of this discussion. And Bitcoin's current value puts its market capitalization at $553 billion. That is the highest we've seen since mid-August. Bitcoin was in the lower $500 billion range for the most of the last 2 months. It was $522.4 billion last week, for example. So Bitcoin's price pump has added about $31 billion to its market cap. So if you are looking at the value of your stack, if you are a numbers go up kind of guy, constantly checking prices, that's cool to see. For those of you who value your wealth in shiny yellow rocks, one Bitcoin will currently cost you 14.7 ounces of gold, 14.7 little round shift bucks for just one Bitcoin. That's almost a half an ounce of gold more than last week. But still relatively cheap for you gold bugs who are sitting on the fence thinking that it might be time. As I always say, you get the price of Bitcoin. You get Bitcoin at the price you deserve. And right now, if you're a Peter Schiff type, if you're a gold bug, if you're one of those gold bugs who's not also a Bitcoiner, that price is 14.7 ounces of gold. For those of you who value your wealth in pizza, one Bitcoin will purchase you 1,584 large pepperoni pizzas from Papa John's. That is one large pepperoni pizza every day for more than 4 years, 4.3 years. As a matter of fact, one large pepperoni pizza every day from now until sometime in February of 2028, if you were to trade your Bitcoin for pizza. And I know I said that would feed a family of 4 once a day. And apparently I stand corrected because, as we'll mention in the boosts, Leggy called me out on that. So touche, Leggy. But it would keep a family of 4 from absolutely starving to death for 4.34 years for just one Bitcoin. How's that? Is that a little bit better than feed? Because I certainly can relate. To one pepperoni pizza. I mean, in college, I could easily eat a large pepperoni pizza all by myself. So, all right. Moving on. I already mentioned that the blockchain was, the mempool was clearing out a little bit. Last week, there were 57 blocks of the transactions pending in the mempool. And right now, according to Clark Moody's dashboard, there are 48 blocks worth of transactions pending. And that's up a little bit again from earlier this morning and later last night, but still, down 9 blocks from last Wednesday and trending in a positive direction. Just a month ago, there were 64 blocks worth of transactions pending in Clark Moody's mempool, and we saw 92 blocks worth of transactions pending back in May. So definitely a lot clearer than when we were at the peak of that ordinals and inscriptions hysteria. Mempool.space is telling a slightly different story. They're showing that, let me back up a bit. Clark Moody is recommending that if you have a high priority Bitcoin transaction that you need to guarantee it's in the next block, that you need to pay a fee of 20 sats per VByte to do so. Mempool.space is showing a little bit more optimistically that 9 sats per VByte, or just 36 cents, will get your transaction approved in the next block or so. That is less than half of last week when Mempool.space was recommending a fee of 20 sats per VByte, which was what Clark Moody's fee estimator was recommending last week for an immediate transaction, a high priority transaction, which is exactly the same as Clark Moody's dashboard is still recommending. Although for the third week in a row, Clark Moody's fee estimator is saying that a 1 sat per VByte will clear, 1 sat per VByte fee transaction will clear if you have up to a week to wait. I have no idea what's distracting me a little bit. It's actually a really nice night. There's no noises or anything I can hear out there, but I have a little bit of an echo or a hiss or something in my headphones, and I'm allowing it to distract myself. So focus, Chris. I need to focus. I must concentrate. I might be dating myself by quoting the movie Airplane there. Hello, hello, hello. Echo, echo, echo. Pinch hitting. Okay, not gonna go down that route. But if you know, you know. Okay, so the metric I like to follow, my favorite metric that kind of got distorted after the whole Taproot activation, Bitcoin's 24-hour on-chain transaction rate has bumped up a little bit. The last several weeks in a row, it had been trending down. Last week, we were averaging 3.05 transactions per second, and currently we're averaging 3.26 transactions per second. And I had always said, and this was just my observation, this isn't any kind of TA, but in the more than 2 years we've been doing the podcast, until Taproot came along, anytime we saw more than 3.14 transactions per second average, the price of Bitcoin is pumping. And that's looking like that's still holding true, because the price of Bitcoin is currently going up, and we're looking at an average of 3.26 transactions per second. So maybe that statistic is going to keep its value. Maybe that's not a statistic that we need to abandon. I was when we were looking at 7 or 8 transactions per second with all those inscriptions, all those ordinals transactions clogging up the mempool. It looked like maybe that metric wasn't going to hold anymore, but I guess we'll have to wait and see. I'm glad I didn't abandon it, because it had been a useful metric to look at, just anecdotally at least. Since we last spoke, it got just a little bit more difficult to mine Bitcoin. There was an upwards difficulty adjustment. Actually, it was fairly significant. 385 blocks ago, it got 6.5% more difficult to mine. As you know, Bitcoin adjusts the difficulty that is required to find the next block every 2016 blocks, with the goal of maintaining 10-minute block time averages. It has been increasingly more and more difficult to mine Bitcoin. Obviously, back in the day, you could mine Bitcoin with your laptop, and then they came out with GPU rigs using graphics cards to mine Bitcoin, and then they invented the application-specific integrated circuits, ASICs, the Antminers, and those were originally just like USB thumb drives you'd plug in, and now they're 220 volt, 2000 watt monsters, and there's hundreds of thousands of them in some of these mining operations. So because the hash rate keeps getting more powerful, because the network keeps getting more secure, in general, the difficulty has gone up. But of course, from time to time, we've seen the difficulty go down. When, for example, the Chinese miner ban came out, there was a period of time when miners were basically migrating from China to Texas, where difficulty was adjusted downward several times consecutively. But that trend is currently up, and we are looking at another difficulty increase in approximately 11 days from now, and 1,631 blocks from now. And depending on where you get your data, that's going to be another increase of anywhere from 2.83 to 6.1%. And that is because blocks are still screaming in at 9 minutes and 27 seconds. Not quite as fast as last week when they were screaming in at 9 minutes and 20 seconds, but obviously a lot faster than 10 minutes. And you get the picture. So definitely looks like we're going to see a significant difficulty increase. And the rumor is the new Bitmain Antminers, the new, the next generation Antminers are starting to roll out. And if they're going to start rolling out to the commercial miners, that means Bitmain's probably been running them for a month or two to test them, because they're kind of notorious for testing your new miner for 90 days or more before they box it up and ship you a dusty Antminer. Real quick, I want to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain or Breeze. You can support your favorite podcasts by listening to Fountain, and one of the ways you can do so is through the value for value model, where you can say, hey, I think that listening to this podcast is worth a certain amount of Satoshis per minute, whether it's 1 Satoshi a minute or 500 Satoshis a minute. And you can set that per podcast and stream as you listen. Or you can send boosts, and boosts are basically messages on the Lightning Network, where they're shout outs basically, but they're on the Lightning Network. And so you're sending Satoshis with that message. And we do have a boost. Once again, it's from Leggy, longtime supporter of the podcast. And as I alluded to when I was talking about the Bitcoin for Pizza Index, the Papa John's Index, Leggy sent us 5,000 sats and says, "You thinking a Bitcoin could feed my family for several years shows you that you don't need my family." Ha! The winky face. That is true. Touche, Leggy. And I guess I have to agree. I'm oversimplifying it. I know you're teasing. I know that's in jest, but you know what? It probably wouldn't come anywhere near feeding my family either. And if you have teenagers out there, it probably wouldn't even feed a quarter of your family. So thank you once again for the support, Leggy. And that's funny. But for the purposes of consistency, I'm still going to meter that out and let you know how many days you can have just one pizza a day, because I think that's a better way for me at least to visualize it. So thanks for your support, Leggy, and thank you to those of you listening from wherever you're listening. And speaking of where you're listening, our geographic distributional listeners has remained unchanged again. It hasn't budged since September 20th. The top 10 countries are as follows. Number 1 is the United States. So hello and thank you to my friends listening from here in the United States. Number 2 remains Argentina. So hola, muchas gracias, amigos. Number 3 remains Germany. So guten Abend, I guess. Dankeschön, mein Freund in Deutschland. Number 4 remains Luxembourg. Again, Dankeschön, mein Freund, or Morgen to those of you in Luxembourg. Number 5 remains Canada. So hello to you up in Canada. If I'm wearing a jacket here in Florida, I can only imagine how cold it's starting to get up there. Number 6 remains Spain. So again, muchas gracias and hola to our amigos in Spain. Number 7 remains Colombia. Again, hola, muchas gracias, amigos. Number 8 remains Sweden. So hello to you in Sweden. I apologize, I do not know a proper Swedish greeting, but if you reach out on Twitter at at BTC Bulletin Pod and DM us and let me know. I can rectify that. Also, number 9 is Singapore, and the same thing applies to you in Singapore. Thank you for listening in Singapore. If you reach out to us on Twitter, send me that DM at BTC Bulletin Pod. Let me know what a proper greeting is in Singapore, and I will change that. Number 10, as usual, remains Venezuela. So once again, muchos gracias, amigos. Thank you to everyone, wherever you're listening from. It breaks down to quite a number of countries that we have listeners spread out all over the world, but those are the top 10. Okay, back to the news. Obviously, this is old news now because it's Wednesday and things change fast in Bitcoin. But on Monday, of course, if you're hiding under a rock, Cointelegraph announced that the Bitcoin ETF, the SEC had approved a Bitcoin ETF, and that tweet was quickly deleted with an apology and a quote-unquote investigation, basically explaining that in the rush to be the first to announce the news, they basically tweeted it without going through the proper journalistic procedures for verifying their information. Which seems to be a common story. That's not just Cointelegraph's program. We see that with pretty much any huge breaking news. And then we're not even talking Bitcoin news. We're talking the mainstream news. It's not the first time we've seen media rush to be the first to get a scoop with that headline and end up putting out complete BS, only to look like an idiot later for basically not being journalists at all, because it doesn't matter whether you want to be first. That is purely an economic incentive. They're hoping that they can get clicks, likes, views, and that's the only reason to be first. What should matter most, and journalists like to get on their high horse and talk about their journalistic integrity, what should matter is getting the correct news out there in a timely manner, but correct news. And when you have a major whopper like this, Cointelegraph is no mainstream media corporation, but people do rely on them. They are kind of mainstream media as far as crypto goes. Obviously, if you're a Bitcoin maximalist, you don't read Cointelegraph anyway. Lena had a great little hodler cartoon on Monday, which I'm assuming was poking fun at this because it came out at pretty much about the same time. And it was the little hodler and the littlest hodler. And they're looking at the chart of Bitcoin and it's basically flat. And the little hodler says, "Come on, do something." And then he turns his back into the baby hodler. And meanwhile, there's this huge green candle and balloons and confetti. And he doesn't see it because he's looking at the littler hodler and says, "Nothing ever happens around here." Turns back around and the screen, of course, is Bitcoin is flat again. It says, "So boring." Isn't that the way it happens? I forget the statistic, but they say that, Bitcoin makes all its gains in like 10 days during the halving cycle, something along those lines, that, this is why you should DCA, basically not try and trade, because when Bitcoin moves, it moves fast. And we've seen that, even when it pumps through the roof, and when it crashes fast, partially because of all that algorithmic trading with longs and shorts getting liquidated, depending on which direction things are moving. But it is funny, and that's a great comic. I do love the littlest hodler comics, and I purchased a couple of signed limited edition prints of hers a while back that I've got displayed behind me in my studio. And if we ever get back to doing video podcasts, maybe I'll show them off, because I really do like those cartoons. So shout out to Lena, fantastic cartoon. As usual, you absolutely captured the mood. How apropos. All right. And speaking of the Bitcoin pump, approximately an hour or so after the whole Cointelegraph debacle, the CEO of BlackRock, Larry Fink, was on Fox Business. And he was, of course, they've got an ETF pending. And so it's in their best interest to promote Bitcoin. But he had some really great things to say. And of course, he used the word crypto, not the word Bitcoin. And later, I think he clarified that he meant Bitcoin. But because they have a pending Bitcoin product pending before the SEC, he has to be careful what he says, so he just uses the word crypto, but he means Bitcoin. Speaking about the Bitcoin rally, the recent rally, he said, "It is an example of pent-up interest in crypto. We are hearing from clients around the world about the need for crypto." He added, "I think the rally today is about a flight to quality. With all the issues around the Israeli war now, global terrorism, etc." He continued that people are basically looking for a safe haven asset, and the rally in Bitcoin is people flocking into Bitcoin as a safe haven asset. These are my words now. That is a huge change. Of course, you expect them to change their tune because they're trying to sell a product, right? But remember, BlackRock was very negative. Larry Fink was very negative about Bitcoin and crypto up until basically they announced their ETF, talking about it was for criminals and money launderers, etc. Just like Jamie Dimon, he was no friend of Bitcoin. And apparently now he's Bitcoin's greatest fan and sees it as a safe haven, a great place, a flight to quality. A great place to put your money if you're worried about World War III and global economic collapse. So this leads us to, is the mainstream media getting bullish on Bitcoin again? Is the FUD cycle over? Are they gearing up? Do they know the halving's coming and they're starting to put out their puff pieces so they'll look like they were correct? Because, while during the bear market, it's all fine and dandy to FUD on Bitcoin. But if it's going to pump because the Bitcoin runs in 4-year cycles and you don't want to look like a moron, you start treating Bitcoin a little more positively. So you can say, see, Bitcoin's rallying. We told you so. And along those lines, CNBC is reporting also the Bitcoin safe haven paradigm with the headline on CNBC, the Bitcoin safe haven trade is back on, says Bernstein. And their article goes on with recession fears swelling again. Investors seeking a safe place to put their assets should be interested in Bitcoin, says Bernstein. Bernstein is a private wealth management firm. And back in September, they were equally bullish, saying that Bitcoin and crypto are about to embark on a much stronger fundamental rally. So, people always talk about the institutional money and the financial institutions getting into Bitcoin, and to some extent they've dipped their toes in the water. Filing for the ETFs is a big move. MicroStrategy purchasing Bitcoin, other companies potentially purchasing Bitcoin is a big move that direction. But in general, the mainstream financial industry doesn't have anything to do with crypto or let alone Bitcoin. And I keep saying crypto. I apologize. I've got my notes right in front of me. The headline says crypto, so maybe that's a little bit of a Freudian slip. Also, I'm not an OG, but I'm a little bit more old school. 4 or 5 years ago, people threw around the word crypto and they meant Bitcoin. Well before all the major S coins, that was only, really only Bitcoin, Litecoin, and Ethereum. And they were just called crypto collectively. But usually, since Bitcoin was the number one market cap coin, the granddaddy, the only non-S coin out there, when people said crypto, they really meant Bitcoin. But I know that's a touchy word nowadays. It's Bitcoin and shitcoins. So I apologize for using the word crypto, but I mean Bitcoin. And I think that's what Bernstein means, and that's what Larry Fink means. Speaking of other companies that invested in Bitcoin, it turns out that Tesla didn't actually dump all of its Bitcoin. The Street was reporting that Elon Musk's Tesla still holds $275 million of the Bitcoin. As you remember, Elon Musk announced that he bought Bitcoin and that Tesla bought Bitcoin. And then he got some massive backlash when they were pushing that environmentalism FUD that Bitcoin's going to consume all the world's electricity, Bitcoin's going to boil the oceans. And he buckled like a wet noodle and then sold his Bitcoin, or at least we thought he did. But according to Tesla's 2023 Q3 quarterly earnings report, Tesla still holds 9,720 Bitcoin. The article in thestreet.com goes on to say the quarter end report made no mention of Bitcoin, implying that no conversion to fiat took place, which would impact the company's profitability and cash balance sheet and typically be reported. At its peak, Tesla's Bitcoin's treasury was worth 1.5 billion, blah, blah, blah. Of course it was, because Bitcoin was worth more. That doesn't necessarily have anything to do with the number of Bitcoin it had. They continue. With an SEC filing revealing they had purchased 43,000 Bitcoin at an estimated average price around $34,000 in early July 2021. But the article continues saying that Elon Musk had a change of heart. We already spoke about that with the whole green energy FUD, and that Tesla sold 4,320 Bitcoin in the first quarter of 2021, and it sold roughly 75% of its remaining Bitcoin at a 48% loss. Way to go, Elon. In the second quarter of 2022. Now, I'm a firm believer that that wasn't necessarily 100% Elon buckling to the ESG movement. As you recall, there were some change-ups in the amount of carbon credits, energy credits, money basically that most of Tesla's profit at the time was coming not from selling their cars, but because they're manufacturing electric cars, the government allows them to sell energy credits, green energy credits, and they were making their money from selling these energy credits. So then you could be a polluting company and buy these carbon credits, these green energy credits, and make it look like you're green, right? It's a shell game. It's a scam. It's a con, not necessarily on Tesla's behalf. Obviously, if there's money out there to be had in their industry, they'd be foolish not to take it, right? But it was accounting for a big chunk of their revenue, and that got redistributed a bit, maybe perhaps unfairly. But either way, it was their earnings were going to take a huge hit as a result of the energy credits. And so the theory is they dumped that Bitcoin to offset some of that. But this article says they sold at a 48% loss. So I'm not an accountant. I'm just reporting what I remember from the second quarter of 2022. But all that really matters is that apparently Tesla still owns 9,720 Bitcoin, which is currently worth $275 million. But, Bitcoin 4X's. Bitcoin basically just pops above $100,000. All of a sudden, they're going to have $1 billion of the Bitcoin again. And all of a sudden, that's going to look like a big deal. Other companies are going to sit up and take notice. So not only is MicroStrategy going to look really, really good in the next bull run, it looks like Tesla stands to look really good too, and be a source of that corporate FOMO. All right. Also in the news, and this is really cool, we are just 4 days away from Argentina's presidential elections, and it's looking like Javier Milei has a really good chance at winning. Now, Javier Milei is not necessarily a Bitcoiner. He's spoken about Bitcoin. He's positive about Bitcoin. Mainly, he's an Austrian economist, and he's promising to do away with Argentina's central bank. And that's really cool. So either way, even if he wouldn't put Argentina on a Bitcoin standard, maybe he'll back Argentina's currency with a Bitcoin standard. Maybe he'll just go on a US dollar standard. We really don't know what he's going to do, but what we do know is it certainly isn't going to be bad for Bitcoin. And boy, the timing couldn't be better because, I mean, if he gets elected as president, that's just a couple of months away from the halving. And that's what a perfect time. When El Salvador adopted the Bitcoin standard, they did it right in the middle of the bull run. And so, if Bitcoin just does what Bitcoin does, it was going to retrace to below where they bought in, basically, because Bitcoin runs up and then it traditionally has its 60, 70, 80% dump. And if you're in the middle of the run up, that means you're going lower. And clearly we did, because we dropped all the way down into the teens. Although I think that was kind of a black swan. Realistically, we probably only dropped into the 20s. You're talking hours or days that we were below $20,000. So, but significantly less than where Bitcoin was when Argentina bought in. So I'm sorry, when El Salvador bought in. So Argentina is perhaps poised particularly nicely. If they do adopt a Bitcoin standard or start integrating Bitcoin into their economy right before the halving, that would just be amazing. And talk about country FOMO, nation state FOMO. Right now, all eyes are on El Salvador, what's going to happen to El Salvador. But Argentina could be getting on in the mix. That's something we're going to have to follow. I already spoke about Bank of America's unrealized losses of $131.6 billion, so I don't need to beat the dead horse of the banking sector not being out of the woods by any stretch of the imagination. But that dovetails nicely with BlackRock's Larry Fink and others pointing out that Bitcoin is increasingly being viewed for what it is, and that is a safe haven, a store of value. In addition to number go up technology, in addition to being freedom money, in addition to being the hardest currency ever invented, the most permissionless currency ever invented, the fairest currency ever invented. In theory, if Bitcoin lives up to its use case as a store of value, instability, recession, chaos is good for the price of Bitcoin, because people are going to start hoarding things that are going to keep their value. And I firmly believe over the long term, that is Bitcoin. Speaking of Bitcoin, I think I mentioned Plan B. He's still off sailing somewhere. Plan B was infamous during the previous halving cycle for his stock to flow models. And say what you want about Plan B, say what you want about stock to flow, say what you want about making price predictions in general. But if you looked at his original stock to flow model, not his cross asset model that was a little wilder, his original stock flow model only said we were going to be greater than $50,000 in the last bull run. And he nailed that. So he's still worth watching, even if just for entertainment value. And the last thing he posted before he went off on his annual sailing trip where he doesn't have internet was back in September when he retweeted, "To be clear, I stand by my January 12th prediction. November 2022, 15.5K was the bottom." So he's calling the bottom is already in. Bitcoin will rise towards the 2024 halving. No brainer. Bitcoin already rose from 18K to 27K since January 12th. No brainer. Then he has question marks. 2024 halving will be greater than 32K. And then parentheses, 32K to 66K in my opinion. That sounds reasonable because we're really close to 32K. So it would seem reasonable that 32K to 66K would be about where we would be at the halving. Probably, I would say closer to 32K because, traditionally at the halving, we're significantly below the previous all-time high. We don't retake the previous all-time high for like 6 months to a year. During the 2020 halving, we crossed the halving in less than half of the $20,000 all-time high, and we didn't hit that $20,000 all-time high until the 20th of December of that year. So 6-8 months later. Then he has question mark 2025, bull market greater than 100K, parentheses 100K to 1 million in his opinion. I don't think 100K is out of the realm of possibility in any shape of the imagination, which is really funny how your perceptions change, because in the 2020 halving, $20,000 seemed like the moon. After the 20,000 of the 2016 halving, the 2016 halving, Bitcoin was less than $1,000, and then it shot all the way up to 20,000, and nobody would have thought Bitcoin was going to 20,000 when it was at like $400. And then when Bitcoin crashed back down to like 3,000 after that, going all the way to 69,000 seemed like, are you kidding me? That's 20x. So sitting at almost $30,000 right now, to go to 100,000 is really only 3x. And if we 20x'd the last couple of halvings, 3x is a lot more realistic. So 100K seems really, really, really conservative of an estimate. So he puts that range in there of 100,000 to 1 million. And 1 million probably is about as extreme as his stock to flow model for this halving cycle, but you never know. I mean, stranger things could happen. You get some ETFs approved, you get some corporate FOMO, and you get some nation state FOMO. We could blow through 1 million easily. There's a path for that to happen, but if we saw 250K on this cycle, I would just be ecstatic. I couldn't believe it. It would be just amazing. So even 100,000 is, that's almost 4x from here, people. $100,000. We need to stop being so greedy. It's not the size of your stack. Remember, not the size of your fiat stack. But everybody, we start talking about the halvings, and people get Lambo Moon Boy stars in their eyes, and we start talking US dollar prices. And even I get caught up in it, because it is fun to look at your stack of Satoshis in what, the fiat terms, what everybody else, the normies, are using, and compare it, to their 401ks or their stock portfolios or their savings accounts, whatever the case may be. Now, Plan B also reiterated his call at 15.5K in November was the bottom. I already discussed that. I think that's a no-brainer. We'd have to have a pretty big black swan event to get below 15.5K again. It could happen. Anything could happen. Right before the last halving, we had the lockdowns, and nobody saw that coming 6 months before the halving. It looks like the economy was booming. Donald Trump was going for a landslide re-election victory, and then all of a sudden the world completely changed. And so, and that happened 1 month or so before the halving, and that's when Bitcoin plummeted to like $3,000. So that that was it. It lost. It went from like 10,000 to 3,000. So if something like that happened, we could see 15.5 again. But I think his call to the bottom is already in, is a safe bet. And if we do get another black swan like we did in 2020, that only lasted for hours. Bitcoin was, it dropped in like May and then was fully recovered by June. And that's just the way Bitcoin rolls. All right. So why are we here? Well, we're here because it's Wednesday, and Wednesdays are DCA Wednesdays. And if you've been following this for any length of time, you know that we started dollar cost averaging just $20 US of the Bitcoin once a week on Wednesdays, all the way back on July 28th, 2021. And what is dollar cost averaging, you might ask? Well, DCA, or dollar cost averaging, is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. So our equal portion was $20. Our regular interval is weekly. This is a you do you thing. I set the bar really low at $20 because I wanted to set it at an amount that was low enough that almost anybody listening to us could come up with $20 a week to put towards their stack of sats. If you're Michael Saylor and you stack in the hundreds of millions or billions, by all means, you do you. But what's important is you pick a consistent portion that you invest at regular intervals, that you keep it consistent. And most people DCA on their paydays. So if you get paid bi-weekly, you get paycheck every 2 weeks, then maybe every other week is your DCA interval. If you get paid, on a gig economy where you don't know when your pay is coming in, then maybe you pick a day or days that are good for you, and then just make sure you have your money set aside for that day. And that's kind of what we do with this podcast. I make sure I have $20 for Cash App so I can do my stack on Wednesday. But again, you do you. This is going to be our 117th stack. As I mentioned, we started over 2 years ago on July 28, 2021, stacking 116 Wednesdays so far. In doing so, we've converted 2,320 filthy US cuck bucks, including $52.20 worth of fees, into 8,062,464 sats at an average cost basis of $28,775.32. So a little bit more expensive than what Bitcoin's currently worth. But I remind you On our first DCA purchase on July 28th, 2021, we bought at a price of $39,716, significantly more expensive, and we bought between the two peaks. So we bought all the way up to that $69,000 high, and then we bought all the way down. And doing so, that smoothed our average purchase price out quite nicely. So an average cost basis of $28,775 that's pretty good. Even $39,000 average cost basis would look really good when Bitcoin's worth 100,000 or 200,000, but we're really close to breaking even. When that bull run kicks off, that's going to look like that's going to be a really pretty picture. All right, to grow that stack, as usual, I mentioned we're going to use the Cash App, and Cash App is not a sponsor of the show, but I like Cash App because I think they're the easiest way for me to stack Bitcoin. They may or may not be available where you are, so again, do your own research, pick an app that's available to you that meets your needs. If Cash App is available where you're at and it suits your needs, there is a referral code in the show notes where you'll get $5 free for signing up and using Cash App. And that will also tip the podcast $5. So you'll get paid to help support the podcast if you choose to use Cash App. Again, they're not a sponsor. I like them because I think they're easy to use. That 25-cent fee that we're gonna incur today on a $20 purchase will be more than offset by the fact that they're gonna let us transfer that to our hardware wallet later. Enough about Cash App. I have Cash App open. I've tapped on Bitcoin, tapping buy, entered $20, clicking confirm, and boom, we just purchased another 68,837 sats. Unfortunately, that's more than 4,000 sats fewer than we purchased last week for the same amount of US dollars. And that is because that's what happens when the price goes up. People always want the price to go up. And I always say I'm happy when the price is low. And it's kind of one of those 6 and 1 half dozen the other things. Obviously, I'm really happy to see the value of Bitcoin increase because it means adoption's increasing and early adopters are benefiting from that increase in price. But I'm not planning on selling this Bitcoin or even spending it on anything anytime soon. So to me, and what should be to you, in my opinion, is that all that should matter is the number of sats you accumulate. Now, 68,000 sats is still a lot of sats. We bought a lot fewer sats when Bitcoin was at its peak. I think we got 36,000 sats for our purchase. Was the fewest sats we got. So basically half of what we got today. So we're going to take advantage of these, what I consider cheap Bitcoin prices. That has brought our stack total up to 8,131,301 sats. If you're sitting out there listening and you think, I only have $50, I only have $100, am I too late? Is it even worth it? I think we've shown you that in just 2 years, and that 2 years has gone by fast. In just 2 years, we've built up a stack that will be more Satoshis than the average person in the world will ever be able to fathom to having when hyper-Bitcoinization eventually hits. Even if you just purchased today, if this is your first stack and you just bought 68,837 sats, and you do that 4 more times and you've got as many sats as the average global citizen will ever be able to hope to have one day. And that I think will be significant. So again, do your own research, you do you, but I think we've shown that dollar cost averaging has been the smart way to go because, we've purchased more than 8 million sats. We've done it at an average price now of $28,777. Whereas if we had lump summed in, we would have bought at $39,716. We'd have more than 2.25 million sats fewer. So we would have less than 6 million sats instead of more than 8 million sats had we not DCA'd. And that's really awesome. All right. It is getting cool out. I want to get this edited up and posted out there for those of you that are waiting with bated breath to listen to the latest episode that I put out for you, to listen to this stack, to listen to this episode. So thank you for listening. Real quick, if you're not following us on Twitter, please consider following us on Twitter. We are at BTC Bulletin Pod. Elon is making it harder and harder to reach people on Twitter. If you don't pay to do so, we are not going to pay to do so. Along those lines, we're also on Nostr, and you can find our Nostr public key in the show notes. But by subscribing to us on Twitter, you're more likely to see our posts. You're more likely to find out about us. And more importantly, I want to hear what you think about the podcast. So subscribe to us on Twitter at BTC Bulletin Pod. Send me a DM. Let me know what you think. Let me know what parts of the show you liked. Let me know what parts of the show you didn't like. Let me know what you think you'd like to hear me talk about in the future, or just reach out and say hi. And if you're feeling super generous like Leggy has been, listen on your favorite podcasting 2.0, such as Fountain, and send us a boost and let us know what you think. And if you are old-fashioned and just want to send me an email, you can always reach out and email me at bitcoinbulletin@protonmail.com. What's important is I like to hear from you. I like your input. I like knowing who you are and where you're at, because while I'm sitting here staring at a monitor, dissolving into the background, I can see the faces of all these plebs listening all over the world. And that is really awesome. It's a great feeling. It totally makes it worth doing this podcast. It is why I'm here. And speaking of being here, I will see you next Wednesday and every Wednesday while we grow that stack together. And until that time, keep on stacking those sats, you sexy sat stackers.